So Nathan's been giving me questions that we're getting from Reddit. Reddit's an awesome platform for real estate investment questions, especially if you're a guy like me whose entire life is wrapped up around investment strategy for residential real estate. So this was a great question because it's somebody who's asking, they've got a rental across country, 1,000 miles away. It's been doing great. It's been pretty hands-off. The tenant who's been living there has been long-term, been paying the rent, been maintaining the property. It's been piece of cake. But the tenant's now moving on. So the owner's thinking maybe it's time to sell. Paid $289 for it in 2009. It's worth $570. So the investment did really well. It's positive cash flow, but the investor is thinking, well, maybe I should bring this capital closer to where I live. So of course my questions were, where's the property and where are you? Because the first takeaway is your property doubled in value since 2009. That's great. Sometimes that means you caught a wave just right? You bought at a low point, which by the way, worth noting that everybody told this person he was crazy or she was crazy when they bought this property, right? 2009, the sky is falling, don't buy real estate. They did, it doubled in value in 10 years. That feels like California or DC or Denver to me, someplace that had a really, really strong upward trajectory. And those really steep trajectories, they don't keep up forever. They eventually level off. So if I had a property that doubled in value, I want to know more, but I'm assuming that you caught the wave. And so if you do a 1031 exchange, i.e. you sell the property and roll it into something else right away, you don't pay any capital gains on it, and you can catch another wave. So perfect execution on real estate investing, if you want to be opportunistic, is buy quality, catch the wave based upon population growth, migration patterns, job growth, macroeconomics that lift up the value of a market more steeply than the average. And then when it crests, you jump out and catch the next one on its way up, right? We talk a lot about that here. There are a lot of early bloomers and late bloomers in the real estate market. So there are places that are on their way into an upswing, and these things can be read, right? The stats are out there, the data is out there. And we like to share the methodology of tracking population trends. Population rushes create upward pressure on prices and rents, right? Point number two is, this is a person that no matter what they choose, it's a great option. Right? They bought a property at what was considered a bad time. It doubled in value. They could hold it. The money stays safe. The income keeps coming in. They can roll it into something else closer to home, depending on where home is, maybe generate a higher yield and catch another wave. Or, the world is different now. So you can decide, I live in Chicago. I've got a rental property in New York. I'm going to get out of the rental property in New York because New York's taxes are going too high and the value's been strong. Let me move it over to someplace in Texas or Tennessee. And there are national property management companies now that you can have a face-to-face relationship with somebody in your town who's got a branch office in the town where you want to invest. So, this is an interesting time to get this question because 2009, the sky was falling. 2020, all of a sudden, out of nowhere, the sky's falling again, right? 2 weeks ago, best economy of all time. Now there's a virus. Now everybody's freaking out. I'm not freaking out. I'm not going to freak out until I see 10,000 confirmed cases in the US because I know the people who are fanning the flames of this hysteria are known for that. All right. And I've been around long enough to remember the swine flu and the mad cow disease, and I could probably keep going, right? And every hurricane that starts in the middle of the ocean is going to destroy my town, and I just don't believe them anymore. So I also know that the stock market, the pros in Wall Street, love it when we freak out. Stock market goes down 3,000 points, and they're all buying all the shares that we're dumping. So call me jaded, but I don't trust the source of any of this information right now. And so I'm going to wait and see. What I do know is that real estate is not hysterical. The stock market is hysterical. Media is hysterical. People have the capacity to be hysterical, but real estate doesn't. So I'm happy for my friend here on Reddit because he or she has got lots of good options. Do nothing, you win. Sell it, you win. Buy something else, you win.